What are your thoughts on gold as a reserve asset? You have the central banks like China, Russia increasing their reserves, especially over the last 10 years. Germany, for example, asking for some of their holdings back from New York. It doesn't produce any income, I guess, unless it's leased. Why do you think they would want that, and what value does it offer, in your opinion?
Well, you're also asking this question to someone who's been governor of Bank of Italy. Bank of Italy is the fourth largest owner of gold reserves in the world, which is fairly disproportionate with the size of the country, no? But I never thought it wise to sell it, because for central banks, this is a reserve of safety. It's viewed by the country as such. In the case of non-dollar countries, it gives you a fairly good protection against the fluctuations of the dollar. So there are several reasons, risk diversification and so on. So that's why central banks, which had started a program for selling gold a few years ago, substantially, I think, stopped. By and large, they are not selling it any longer. Also, the experience of some central banks that have liquidated the whole stock of gold about 10 years ago was not considered to be terribly successful from a purely money viewpoint.
The ECB, Denmark, and a few others.
Well, I mean, it really is interesting to see these European countries move to negative interest rates. And in a way, I'm surprised that there hasn't been more pickup in the demand for cash. Cash is not a very convenient store of value.
But very quickly, if you could answer another question, because I'm curious about this. You know, the price of gold today is $1,580. The dollar during these last 3 years was devalued almost 50%. When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis, then they have gold as a protection.
Do you think gold is money?
No.
It's not money. Even if it had been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back my time.
So a quick question, though. I mean, two questions. One is, given what you're saying about the magnitude of the task currently facing the Federal Reserve, and given that this has never been seen before, if you were a betting man today, and you have been trading the markets in the early parts of your career, what probability would you give to the Federal Reserve being able to exit these challenges without creating another financial crisis?
Well, let's leave the world crisis out.
Okay, extreme instability or volatility.
If I can use the substitute term, turmoil.
Turmoil. Yep, turmoil would be good. We like turmoil.
I don't think it's possible.
You don't think it's possible?
No, I think that, remember we had that the first tapering discussion, we got a very strong market response. And then we reassured everybody we have no, and remember, tapering is still slowing the rate of increase. We're still increasing the balance sheets. And the ECB is starting anew on, the ECB's got far greater problems than the Fed has. The Fed is in reasonably good shape in that regard.
Well, that's not reassuring. But before, I'm going to turn to the audience for questions in 1 minute. But before I do, though, I just want to ask, though, one of the really interesting chapters in your book is about gold. And there's been a lot of media debate in the past about your views on gold. You yourself have posed the question as to why would anyone want to buy this barbarous relic? I don't know whether John Paulson is in the audience, but it's an interesting question. But Do you think that gold is currently a good investment given what you're saying about the potential for turmoil?
Yes.
Do you put...
Yeah, I mean, economists are usually perfect in equivocating. In this case, I didn't equivocate. Look, remember what we're looking at. Gold is a currency. It is still, by all evidences, the premier currency where no fiat currency, including the dollar, can match it. And so that the issue is, if you're looking at a question of turmoil, you will find, as we always have in the past, it moves into the gold price. But the gold price is actually sort of half a commodity price. So when the economy is weakening, it goes down like copper. But it's also got a monetary characteristic which is intrinsic. It's not inbred into human beings. I cannot conceive of any mechanism by which you could say that, but it behaves as though it is. Intrinsic currencies like gold and silver, for example, are acceptable without a third-party guarantee. And the question is, why do central banks put money into an asset which has no rate of return, but cost of storage and insurance and everything else like that? Why are they doing that? If you look at the data, with a very few exceptions, all of the developed countries have gold reserves. Why?
Well, I imagine right now it's because of a question mark hanging over the value of fiat currency or the credibility going forward.
Well, that's what I'm getting at. Every time you get some really serious question, the 50% of the gold price determination begins to move.
Right.